Ambassador Advisors exist to help people do the very best they can with their money. We help them invest it, we help them take care of it, we help them reduce their taxes, and we help them leave it to the people they care about.
I understand that life is a marathon and not a sprint. And as I've worked with more and more clients, we talk about the idea that we need to have a long-term perspective. We need to be positioned not only to have the flexibility for what is happening here in the short term, emergency needs and things that are there, but also look into the future and how do we really situate our assets? How do we make tax advantage plays to ensure that we're saving on taxes today, we're doing tax-efficient withdrawal strategies, and that's where the real value is. We're in a position where we're not just managing money, we're not just giving a little off-the-cuff advice, but we're bringing some very highly credentialed team members to the table, and that adds up over time.
Over the past year, the U.S. economy's grown at about 2%, and while that's not great, it's not awful either. One of the economists that I follow, he calls it the plow horse economy. We're just plowing along. It could be better, but it's not. Typically, when you come out of a recession, you're going to get 4, 5, 6% GDP growth. We came out of the recession and had 2% growth, and we've been there ever since. And so, without getting that huge gap up in GDP, I think we've got another year or two to actually make up some of that growth.
And it's been a little uneasy for some people. But underneath that, companies have done particularly well. We have stuck to our discipline. We've done the things that have been proven over time, and we've continued to stick with it. And of course, the way we add value during times like this is that we help people with the planning process. We help them save taxes. We help them prepare for the future.
The state of giving last year was up from the prior year. $373 billion went to nonprofits, and 71% of that giving came from individuals. When you take a look at the church in Jerusalem back in the days of the apostles, it was a very poor church, and they relied heavily on the capital that they were receiving from people, but they would use that as income. So what would happen is when bad times would hit, they would suffer. And it seems ironic that for years the church and ministries have been following that as their model. And they're beginning now to realize that when difficult times arise, they have to have something for sustainability. So planned giving is so vitally important for ministries, and we're seeing that being applied more today than what we have before in the past.
What I tell people in many cases is the 5 years prior to retirement and the 5 years after retirement, this decision decade, is a really big area where people need to think about what they're going to do and be ready for a lot of change. And so what I challenge people to do in 2017 especially is to come in. Talk to our advisors, talk to those folks who care about you that can help you make the best decisions as you go forward to ensure that you're not getting emotional about the things that happen in the market, you're not subjecting yourself to reactions that are going to cause long-term, potentially devastating effects to your financial future, your independence, and in the end, the legacy that you're able to leave to those you care about, the ministries, your children, your grandchildren, and the folks that you really want to make sure benefit from your hard work over the years.
As we look forward, we still consider that the U.S. is probably one of the safer places to invest. But with that being said, the U.S. market's probably pretty fairly valued. It's not overvalued, but it's not undervalued. When we look at opportunities, we see probably more opportunity in the international and emerging markets. They just seem cheaper relative to the U.S. stock market. And we continue to think that bonds are probably overvalued to all equity classes. We've been anticipating higher rates. And so what does that mean for our clients and our portfolios? What it means is we need to protect ourselves. We've positioned ourselves in a very short duration manner and in securities that'll actually benefit from raising interest rates. What does it mean for you, the consumer? It means, hey, if you haven't purchased a house yet, you might want to start thinking about it. Mortgage rates are going to go up. Lines of credit are going to go up. Your credit card balances might go up a little bit. So these are all things that we're watching. Really just means that the economy's stronger and interest rates probably should be higher than where they are right now.
Since the election, I think there's been a sea change in attitude among the investing public, and it's a little bit surprising and unexpected. all of a sudden we have a pro-growth person in the White House, and people seem to have taken to that. And sometimes a small change in attitude can make a big difference in what your holdings are worth. We've decided to move to ETFs and individual stocks, things that are less expensive, more competitive. A lot of ETF platforms that our competitors use would be what we call passive investments. They would not be terribly strategic. We're going to be looking for ETFs that can still outpace the indexes, and I think that will be a differentiating factor with our company.
Our vision statement says that we exist to support and promote biblical stewardship. And we know that everything that we own is God's, so we want to help people be better stewards of what God has blessed them with. The course that we've developed for churches is called Finding Significance. What the Bible says about what they need to do to give, and then also deeper subjects regarding how do you protect your family with insurance, how do you invest the money that you have been blessed with, and then how do you provide a lasting legacy to your family.
Most of our clients do have a heart for ministry and charity, but we often find that they're not giving in the most tax-efficient way. By reviewing what their goals are and where they're at now, we can often save them thousands of dollars in taxes so they can be more generous with ministries and family.
We've got people who are experts in subject matters that people run into on a very daily basis. So we're able to bring these resources to bear when people have questions, and it helps them position themselves so that as they make the next step and as they look at accomplishing the idea of leaving a lasting legacy, they're best suited to be able to do that. From a tax standpoint, from a communication standpoint, we've got the ability to talk in an expert manner on all these areas, and our team members are able to come to the table as a team and really help people as they need it.